Good morning. Today is Friday, February 4th, 2011. This morning I'm asking who's working, and that's a question that we're going to get answered for us here once the non-farm payrolls report comes out a little bit later this morning. That number's due out at about 8:30 Eastern time, but what we're looking at right now is we're looking at the dollar versus loonie. Now, they actually had their employment report came out at 7 a.m., just came out. You can see the loonie strengthening here as the report came in, and it showed a gain of 69.2 thousand jobs. The expectation was for 15,000 jobs gain, which handily beat the estimate. You can see why that's strengthening the loonie right there. Now, the U.S. report is due out a little bit later this morning. All right, we're expecting jobs growth of about 140,000 jobs, and we're going to have to see how that comes in. But I just want to show you some other things happening across the board. You can see here on the map, the Aussie was higher against all. It actually gave back versus the loonie here once the jobs report came out. But overnight in Australia, they came out with their the RBA, that's the central bank in Australia. They came out with their raised GDP outlook for 2011. They raised the outlook to show growth of 4.25% from their previous forecast of 3.75%. And they also came out with an increased CPI outlook, which they're showing that inflation is set to rise to about 3% from their previous forecast of about 2.75%. So if they are correct in their assessment, chances are they're going to be raising rates in Australia sometime this year, barring any major global catastrophe. Now we're just going to take a quick look at the euro here. All right, let's just zone out a little bit. Euro's pretty flat this morning as well, really flat, sitting just above 136. There's no appreciable news or economic data out for the Eurozone today, but what we do have is they have a debt crisis summit going on in Brussels where, the heads of all these countries are going to sit down and try and hammer out an agreement and a solution to what to do about the debt crisis. The problem is that you've had Germany balking at suggestions that, they take a larger role. You have some of the smaller countries looking for more of a handout, and right now it really shows the dichotomy between the different countries around the Eurozone. And part of the issue is that Germany's got this great surplus and their economy's cranking along, but at some point they have to realize that if it wasn't for a lot of these nations taking on all this debt, they wouldn't have such a surplus there. So that's something that they're going to have to consider down the road. But I don't think we're going to hear anything out of there today that's gonna get the market excited that we're going to see any sort of results. So you can kind of take this with a grain of salt. We're just going to look at the pound real quick. Pound's a little bit lower. They actually had some home price figures that came in that showed that home prices decreased a little bit less than expected over a 3-month moving average. Now, while this doesn't mean that home prices are rising and that they have serious inflation there, it does contribute to the inflation story that they've got, which could mean that the B of E is going to have to act maybe sooner than later. So getting back to it, yen, not much happening with the yen today, just kind of muddling around, waiting to see if it's going to be necessary here to sell yen, to take on some more carry trades if the non-farm payrolls number comes in better than expected, or if we're going to get a little bit of a flight to safety trade happening before the weekend with the Egypt situation still going on, and if the non-farm payrolls number comes in worse than expected. So we're waiting to see about 140,000 jobs here. Back in the day, and also, I just want to mention that the unemployment rate is expected to actually tick higher to 9.5% from 9.4%. But what that could be a function of is an increase in the participation rate. And what that means is that workers are now less discouraged. They're coming back into the workforce. They're looking for jobs. So it doesn't necessarily mean that you have all these a net negative going on. Just more people are entering the workforce. So we're going to have to see what happens with that number as well. But back in the day, when I used to sit on the trading desk, me and the guys, we'd sit around and we'd actually, place wagers on what this number was going to be. This is the non-farm payroll report is the most important number that comes out, regarding the economy and especially affecting the currency market. So, whoever was closest would win the pot. So I'm just going to throw out my guess this morning for you, and I'm going to say that I think that we've seen a lot of very good economic data of late. And anytime I see, just this rosy picture being painted, I always, the pessimist in me always sort of jumps out. So I don't feel like, the economy's regressing. I think it's doing well, but I just don't think it's doing as well as everybody thinks. So I'm going to guess 94,000. That's my number. Now, just remember, don't take this as a trading recommendation or advice. This is just a guess I'm throwing out there, which, if I'm close to being correct, I'm going to pat myself on the back later and say, okay, you did a good job. So that's what we're looking at this morning. Keep your eye out for that non-farm payroll report, 8:30 a.m. Eastern Standard Time. Expect lots of volatility both before and after, so trade accordingly. That's what I've got for today. Have a nice weekend and good trading to all.